there seems to be no end to the demand for Tesla, TSLA, eclectic vehicles, EVs, as it has been raising prices, and its free cash flow, FCF, is surging. TSLA stock is still over 18% below its recent peak price of $1,229.91, with its price today now crossing over $1,000 again today, $1,005 as of mid-afternoon. Tesla has come through a rough time. The stock took a major dip when the Russian war on Ukraine started at the end of February. It tanked down to $766 several times. But since then, TSLA stock has slowly drifted up. But there is every reason to believe, especially now that two new additional EV plants, one in Austin, Texas, and the other outside Berlin, Germany, are now fully open and ramping up production. This is in addition to its existing two plants in California and Shanghai, China. Recent developments at Tesla. The simple truth is that there is still a very strong demand for Tesla's electric vehicles, EV. In fact, the company has been raising prices across the board, as The Verge recently pointed out. Needless to say, this is a sign of excess demand. In fact, there were rumors that part of the reason it raised prices was resale and secondary prices of newer models were actually rising, according to Rob Moorer, of Tesla Daily YouTube fame. In his Friday, March 18 video, Rob shows how interest in Tesla vehicles has been spiking. He also shows how resale prices have been climbing, forcing Tesla to raise prices. The Verge also pointed out that Tesla's price increases were between 5 and 10%. The cheapest car it sells, the rear-wheel drive Model 3, now starts at $46,990. Its top-end model, the Model X Tri-Motor, rose in price from $126,490 to $138,990. Even more amazing, this was the second price increase in less than 1 week, according to The Verge, although the prior hikes were only on certain models. This latest round was on all its models. Another major cause for the increases is the price increases in its raw materials. On March 13, Elon Musk, Tesla CEO, tweeted about this. He said that Tesla and SpaceX are seeing significant recent inflation pressure in raw materials and logistics. The truth is that inflation in the US is now 7.9% on a look-back basis. But there is good reason to believe that inflation could top 10% very soon, as I recently wrote. The net result is that these price increases will likely allow the company to keep its excellent margins, despite the effects of inflation. In fact, last year produced very high free cash flow, FCF, margins. Where this leaves TSLA stock. Tesla is so incredibly profitable from an FCF standpoint, that FCF was $5 billion in 2021, even though it built out two new large super plants, one in Berlin and the other in Austin, Texas. This included $2.8 billion in FCF during Q4 alone. In fact, the chart below, taken from Tesla's Q4 earnings deck, shows that operating cash flow and free cash flow, FCF, has been rising consistently higher in the past few quarters. Moreover, now that the plants are largely built out, one might assume that the company's FCF margins might increase from the effects of higher forecast sales, price increases, and the reduction of capex spending this year. The table below from Tesla shows that on a last 12-month basis, LTM, Tesla has been dramatically increasing its FCF. For example, LTM FCF rose from $4 billion to over $5 billion in Q4 alone. Estimating Tesla's value. Last quarter Tesla's FCF margin was 15.7% in Q4. It made $2.775 billion in FCF on revenues of $17.719 billion. This helps us estimate its value going forward. For example, since there are now new plants online, we might assume FCF margins rise to 20% in the next 12 months. Using analyst sales forecast for 2022 of $82.79 billion, FCF could hit $16.558 billion. To be conservative, let's just call it $16 billion. As a result, assuming that TSLA stock will eventually be valued by the market with an FCF yield of between 1% and 1.5%, i.e., 1.25% FCF yield, its market cap could rise to $1.28 trillion. That is 23.1% higher than its $1.0397 trillion market cap as of March 25, according to Yahoo Finance. This means that TSLA stock is worth at least $1,238 per share, i.e., 23.1% over its price as of March 25, $1,005.57. Investors can expect that if its FCF margins come in higher than 20%, the stock will rise higher than $1,238. This is why now is a really good time to be buying TSLA stock.